an interesting perspective. You've come from the traditional gold mining side.
Yep.
Now you've been with the Osisko Royalties. You've launched Osisko Royalties.
Sure.
Give us a bit of a perspective from your side why the royalty model is working so well for you.
Well, as an operator, I was always perplexed about the valuation gap between operating and royalty companies. So when we sold Osisko 1, we created Osisko Gold Royalties in June 2014 with the intent on being a competitive precious metal royalty and streaming company. So we evolved that to include some of the things that we felt that we were good at, including the Accelerator model, which is essentially an incubation model where we put assets together with management teams and then provide financing. So for us, it was an evolution from being a single asset mining company to being a provider of capital, and then to also be a cornerstone investor in single asset companies where we felt that we could bring some value and hopefully, be a catalyst to get more capital into the projects, and also to provide a technical backstop in a bigger format that perhaps a smaller company wouldn't have access to that level of technical expertise. So we honed the skills of our craft over many years. We've found Canada's largest gold mine. We took that team forward into what we believe is a more sophisticated model, and it allows shareholders to invest with us in two different formats. You can either invest in the overall royalty and streaming company, Osisko Gold Royalties, or you can also co-invest with us in the accelerator companies that we've created through the incubation process.
So tell us, go into a little bit more detail, if you will, about the accelerator companies, because I know traditional royalty companies are usually quite large cap. We see the accelerator model. Is that something that a smaller investor can get into?
Well, I think that if you look at where you want to put Osisko Gold Royalties in your portfolio, the advantage of royalty and streaming companies is, generally speaking, they don't have exposure to the capital structure of the actual asset. So we pay for our royalty and stream once, and then if there's additional capital required to build that mine or in that project, we would maintain our contractual rights without having to add capital. So that's been generally why shareholders paid a premium for royalty and streaming companies. That's how Falco, Franco, and Silver Wheaton and Royal Gold, who are the only ones that are bigger than us, and then we're the fourth largest precious metal royalty and streaming company in the world now. So it's been a conduit to provide capital to assets, but also, as for shareholders, to have a ring fence about where their risk is. So that's been the fundamental basis of the royalty and streaming model. The accelerator aspect of it is that we've stepped in, we've created these companies, and for each dollar that we invest as a royalty and streaming company, we like to see between $5 and $20 from the market participate with us. So shareholders that are interested in a bigger bet with perhaps higher returns will probably invest more in the accelerator companies. And if you're more conservative and you're putting, say, 5% of your portfolio with somewhat direct drive into precious metals, you would own the royalty company because it's a bigger entity, $2.5 billion company. It has $100 million a year in cash flow. And we don't have any more exposure to additional capital to go into those projects unless we so choose, but we don't have any obligation to do so. So it's a safer bet. Returns are probably lower than if we get a big exploration success like Windfall Lake, where we saw Osisko Mining go from a $10 million market cap to a $1 billion company in 24 months. Those are things that are associated with exploration discoveries, which are quite exciting, but also hold more risk in the beginning.
So accelerator, bigger risk, more reward. Traditional royalties, stable.
That's pretty much it. And I think if you're looking at how you expose yourself to the gold markets or the exploration market, we provide a little more spice in the soup than some of the other royalty and streaming companies, and that we have about 900,000 meters of drilling ongoing this year on our royalty lands. So we have a pretty good chance that further discoveries will be made on our royalty lands without us having to pay for them. So that's the sort of the spice in the soup, if you will, about how we approach exploration upside as a royalty company.
The spice in the soup. What's next for Osisko? What are you looking at over the next 6 to 12 months?
Our accelerator companies have been quite successful. They've gone from a market cap of about $50 million to about $1.5 billion. So continued success there means that they're going to develop into mines. And we'll be looking at putting some capital to work as those projects transition from exploration development into production. So we see about $2 billion worth project financing there, of which some of it could be royalty and streaming. So we'll be working on that, and we're also continuing to participate with other companies that are in development cycle, where they want to build mines or they want to expand existing projects. We also work on acquisitions. If a company wants to go out and buy an asset, a royalty or a stream may be part of the project acquisition financing. So we're busy on a lot of fronts. We probably have between 15 and 20 term sheets active any time of the day. And we participate in a lot of processes where we're trying to be a leader or a cornerstone player in terms of getting a project financing together.
And finally, what do you look for in a partner?
Typically, we like to be in projects that we understand or we can understand. We like things that have good land packages where there's multiple opportunities to win the game. And typically, we want a pretty good piece to start with, at least 1 million ounces or better of what we believe is quality resources that can actually make it to the cut of being a mine. But typically we would like to see something that's going to go from 1 to 3 million ounces or has a chance to have multiple successes. But we also like safe jurisdictions. We're dominantly Canadian with 80% of our investments in Canada. But we hold over 130 assets right now. So we do take jurisdictional risk, but in a limited amount.